Thanks, Chris. Welcome, everyone. We had a grower meeting in July, so this presentation I've tried to strip out most of that information just so I don't repeat it for those growers that were present. Just as background with NPA, in case people don't understand or have any knowledge of NPA. So NPA runs Riverland Almonds hulling, and APPC. And to put it in context, we're one of the larger almond processor and growers and exporters within the Australian industry, with a business that's grown rapidly over the last 5 or 6 years. And I mention that because from an export point of view, we're a significant player in the export market, and that's been exceptionally beneficial in terms of the pistachio business and pistachio export opportunities that we've been working on and developing since 2016. So this is a bit of a general presentation or overview of the industry at a global level, and a bit of a discussion about, or a bit of a presentation about what's going on at the domestic level and within the APPC business as well. So in terms of an overview, the US crop was forecast at 1.65 billion pounds, or 748,000 tonnes. There's been some challenges with weather, particularly with rain at the back end of the harvest. Nut sizing slightly smaller than they'd anticipated, but similar to historical. Stain and insect is increasing after some weather challenges and a slow harvest. It's not expected to reach the original forecast volume. In September receipts, 1.271 billion pounds. In September, if we look at end September 2023 and just get a mark on where they were at that point in time, it was 80% of the final crop. So if we extrapolate the numbers out, then we think it's probably going to be, something like 1.589 billion pounds or 720,000 tonnes, and down 4% on their original forecast. The carryout was 115 million pounds. It was down 20% on the forecast 2 months prior to that, so they've had a very strong finish to the season, and a very bullish commencement to the season to new crop 2025. The original expectation was that the market would open up somewhere around 3.55 billion US dollars per pound, which is $12 a kilo, something in that range, and that was the view up until probably 6 weeks ago or thereabouts. To put it in context, the way the US market works is you have Wonderful, who represent about 50% of the US crop, and generally the other processors tend to follow the lead of Wonderful. Wonderful set the price. They've been very, very successful at establishing prices, holding prices, and really guiding the market. And they generally come out end September, first week of October with new crop pricing, and generally others are pretty reluctant to release new crop pricing until Wonderful come out. So you end up with everyone sort of sitting patiently waiting, speculating a little bit about where pricing is until Wonderful come out. They came out at $4.10 a pound compared to the general market expectation of about $3.55, and the view of other processors as well. So a very, very strong opening price. If we reflect that back to where they opened in 2013, which was their last on crop, they came out at $3.15 a pound. So they've gone from $3.15 to $4.10, with not much difference in the actual forecast of the crop for 2025 compared to the 2023 crop, and with a lower carryout. Early season sales are reported to be solid, particularly in Europe at the $3.10. The domestic US market, it continues to lag with in-shell. Kernel market share is increasing. There's the gap between in-shell and kernel net return. So if we take in-shell product, we convert it into kernel, we sell it at kernel, we account for all of the costs associated with that, and we bring it back to a standardised net return, and we do the same thing for in-shell. We started somewhere around $3.50 a kilo difference, Chris, somewhere around that sort of range between kernel and in-shell on a standardised basis. That gap now is narrowing, and narrowing quite quickly, particularly over the last 18 months. Some of the US shippers tell us that they're now able to put product into Europe and actually end up with an equivalent net return of kernel compared to in-shell. It's for not a large volume, and the kernel market is small in overall context, but that gap is narrowing. So we're seeing that demand for kernel is growing quite strongly, and it's being supported by some strong pricing as well. Kernel demand will need to continue for pricing to remain resilient, and we'll have a look at that in a minute. Wonderful have stated now that their objective is to actually balance on and off crop cycles to remove or minimise pricing volatility between on and off crops. And this is a logical development. It's had to happen, and Wonderful are the only ones in our view capable of actually doing it. But historically, we've had an on crop with pricing, you know, like 2023, they came out at $3.15 a pound, and then you go to an off crop the following year, and they come out with pricing of $3.75 opening pricing. So the difference in pricing between on and off crops has been quite significant. So now what they'll aim to do is to bring a larger carry-in volume through from their on crop into their off crop, balance the crop volumes, and have more stability in pricing. We've experienced resistance in the Australian domestic market. When Wonderful or the US open with new crop pricing, the domestic market in Australia knows. They understand, you know, information travels nowadays, so there is no secret when pricing opens that buyers know. And I can assure you, when Wonderful opened at $3.15 in 2023, every single buyer in Australia of any note was aware of it. So we've been talking to customers about new crop pricing. We've actually issued new crop pricing for 2026 crop based on the back of US opening prices. And at this point, we've had an uptake of 25% of the volume with no retail commitments at all. So the majority of the market domestically is saying at these price levels, the risk volatility for us is too high today. We're not a buyer. So we'll see what happens. Year-to-date shipments, so this is end September out of the US. It's just a comparison of their first month of shipments after they report their new crop. So what we can see is that the domestic demand is down and export demand is up, and compared to last year, which was an off crop, their overall shipments are up compared to last year. And this is just showing it here. So domestic shipments are down 8.8%, export shipments up 28%, and total shipments are up 13.4%. And the columns are the same because it's the first month of shipment. So the first month of shipment is the year-to-date number. As we progressively go through, then obviously there's a difference between the current month and the year-to-date. Just a bit of information here out of the US crop. So if we have a look at their 24-25 crop, so the third last column from the right-hand side, it shows they had a carry-in of 184 million pounds. This year they've got a carry-in of 114 million pounds. So quite a difference. If we come back, I don't have a pointer, but if we come back and actually have a look at their production in 2023, you know, 1.5 billion pounds, and they're forecasting now for the 25 crop 1.55 billion pounds. So there's very little difference in the crop between those 2 years. The difference really is partly a much smaller carry-in volume, but again, you know, I comment that at 1.5 billion pounds in 2023, they opened at $3.15 a pound. Now they've opened at $4.10. So it's certainly demonstrating that there's some resilience in the market at the moment. The Dubai chocolate phenomenon is part of that, but we've seen some really good, strong support for pricing in the market itself. You can see their losses as a percentage of supply are really quite significant, running through the to an average over that period of 5 years of 20.6%. Significant increase in plantings globally, led by California and Spain. Spain doesn't get talked about much, but in 2012, 3,200 hectares planted, and now 60,000 hectares in 2023, of which it's only about 25% of that acreage that's actually bearing. As everyone's probably aware, water restrictions and a large number of plantings are dry farmed. Reports suggest Spain will become the 4th largest producer by 2030. Spain's got approximately 700,000 hectares of almonds planted, and annual production 120,000 tonnes, 170 kilos a hectare. So, you know, when we look at the planted area in Spain, you know, we wouldn't take it and multiply it by 3 tonne a hectare as an example to get their forward productions. I had some conversations out of Spain last night, and the general guide is that, you know, maybe they'll get to 20,000 tonnes, somewhere around that. No one's talking 50,000 tonnes coming out of Spain. We know in some very close detail some of the large modern growers in Spain, and they will do it exceptionally well. Their planting technology is modern. They're planting Cyrora. They've looked at Golden Hills, Lost Hills, but still they're growing in an environment that's not conducive to producing the yields that we have here, and water is definitely an issue, even for these guys that have no shortage of cash to do it well. In recent years, we've seen a decline in in-shell and an increase in kernel consumption. You know, the logical thing, consumers moving to increase convenience, uptake in manufacturing to buy chocolate. The next table just shows us some plantings in California. So if we actually have a look here from 2023 to the forecast for 2031, in projected total acres, 811,000 acres is what they're projecting, and they've been projecting, you know, 28,500 acres planted a year. They continue to project it. It's the latest APG data that's available, and down the bottom is just showing their the yield forecast, pounds an acre, that they're actually projecting and basing their modelling off. And then here, if we just have a look at their overall crop forecasts, I've highlighted in yellow what their projection was for 25 on crop, 1.5 billion pounds. That ended up sitting, you know, 1.65 originally, so somewhere between their high and their expected. And we think it'll end up at 1.57, 1.58 billion pounds or thereabouts, with an expected yield of 3,130 pounds an acre. But it, you know, depending on which number you want to take out of the high, medium and lows, they're going to be somewhere around 2 billion pounds by 2031 on crop. So the market will change. Californian pricing data, if we take a US extra number one, roasted and sold at 21.25, you know, just standard charts that we actually maintain. So the red line is FOB Californian pricing, free on board California, excludes freight into the market, and then we just convert it into a US, into an Australian import parity pricing. So if we were to take that US product and we would bring it into Australia, what would it cost us landed in Australia? The only thing to note is that for whatever reason, the red line should actually now be saying 410, which is where they've actually opened, but on the chart for some bizarre reason I couldn't get it to actually add that number in, so it's just sitting slightly above $4 a pound at the moment with their new crop opening price. Exchange rate movement is a really big factor for us in both our almond and our pistachio business itself, but we can see where it's actually sitting. You know, there was a general view, I think it's fair to say, or certainly I had a view, that the US dollar wouldn't hold the strength that it's actually held with the change of presidents. But, you know, we've seen it this week dip below 65 cents. it is a big factor in terms of Australian dollar returns. So if we were to see any significant or material weakening in the US dollar, then that will change the Australian dollar returns that come, even on the back of origin prices holding firm or moving upwards, as an example. So it's really key for strong returns for us to have a strong US dollar or a weak Aussie dollar, because all of our sales are all based on US dollar per pound pricing. US crop versus US and Australian returns, general market information here. So the blue line is just showing the forecast volume coming out of California, so we can see the steep increase in production in on-crop years from 2016, 2017, right through to the forecast in 2030. And we can see where California net returns are. Net returns to growers, so farm gate prices, versus Australian dollars. Now, it's always tricky to do that because we have to, they never report returns in Australian dollars, it's always in US dollars. So we've got to take a view about where the average exchange rate is when we do these calculations. So it's a guide, but what we can see is that APPC returns or Australian grower returns on a net equivalent standardised farm gate basis have all have tracked consistently higher than US prices, with the exception of 2011 disaster crop year that we actually had in Australia, and that was as a consequence purely of having very limited in-shell and the majority of the volume ending up as shelling stock with discounts of $3.50 a kilo or thereabouts for kernel below in-shell pricing. Duties, this is just showing the current duty levels in China. Just a comparison for roasted and salted and natural product. It is just bonkers. It just makes no sense at all why the duty levels on natural are so much higher. There are a few things that are really, really odd in this sort of setting of duty levels by the China government, but they're where the duty levels are actually sitting at the moment. We've included Vietnam in there because product that goes into Vietnam and then goes into China has zero duty. What does it mean in commercial terms? Everyone looks at the duty levels and goes, does that mean if we're shipping natural product then we're going to get a 70% premium to put it in equivalent with US product coming into the market? You can register and you can obtain approval to import product under bond in China, natural product, then you can roast it and salt it in China. Then you can represent it as the authorities, convert it at a claim 40% difference in value, and it'll be product of China, zero duty. You can put it into Vietnam, so US, Vietnam, converted in Vietnam, roasted and salted product, 40% increase in value, goes into China, zero duty. Chinese are very clever traders. There are two comments I'd make. Those tariffs are commercially unviable and they don't work. So buyers are not buying product out of the US and paying those duties. It is not happening. They are finding alternative ways to actually bypass around the duties and actually get product into the market at affordable, sustainable levels. Having said that, it doesn't go in duty-free, all of the product. There are absolutely duties that are paid, and as a supplier to the China market for all of our crops, we are actually getting some of that upside in value, and certainly China is the most profitable market for us. We say profitable in terms of returns to growers. So in general terms, the premiums that we're able to achieve are somewhere between 8 and 12, 14%, 5%, depending on what's actually happening in the market. So compared to any other market, there is a premium in China which reflects the influence of duties themselves. But you can't capture the full value of duty. Asia, US total shipments in tonnes and kernel shipments, the scales are different, so it's a little bit deceiving. But China shipments represent about 33% of total US shipments. So you know, it is significant in the market, and it continues to be significant in the market. And in the case of almonds, China's about 50% of the volume that goes into China of almonds. About 50% is from China. So China is still buying US product. They're just finding ways to actually do it affordably. This is just having a look at domestic demand, in-shell versus kernel. Everything is always converted to an in-shell equivalent basis, and the orangey line is the in-shell volume and the blue line is the kernel volume. Why are we charting it? Why are we looking at it? We're just simply following what's actually going on in the domestic market with in-shell demand versus kernel demand, and we can see 2021 through to 2024, the blue line kernel. So consumption of kernel is going up, and at the same time we can see the trend of in-shell is actually trending downwards in the Australian domestic market. This is pretty consistent with what's going on in the US, by the way. Exactly the same trend. Demand for in-shell is declining, demand for kernel is going up.
Is that ingredient, Nigel? Is that food ingredient or actual consumer?
Both. It's a combination of both. So consumers are wanting convenience. Consumers are starting to transition to kernel as snacking product itself, often flavoured, but also we see a whole raft of value-add products going into manufacturing as well. This is just our forecast of forward volumes through to 2043. It's not the whole industry. We're not trying to project the whole industry in here, so the whole industry will actually exceed, in our view, 20,000 tonnes by the time we get to sort of 2040, 2043, thereabouts. But again, we can see quite a steep upward trend in production in the Australian domestic market. You know, so add US, add Australia, add Spain. Globally, in the next 10 years, the market is going to be, from a production point of view, in a considerably different space to where it is now. What does that mean? It's really hard to try and forecast that at the moment. But what we would say in general is an increase in production is likely to see some realignment of pricing. Australia versus US in-shell pistachio per capita consumption. We're always really interested in this as well, to understand what's happening with consumption per capita between the two countries. It's difficult to actually compare it with some other countries because you find a lot of other countries are trading countries. The volume that goes in there isn't the volume that actually stays in there, it gets traded out. It's difficult in Europe to actually split it into individual countries because of the EU, the movement between there. So US is the most closely aligned for us to actually track. So the orange is Australian in-shell, the green is US in-shell, and then the blue on the right-hand side of each of those year periods is actually the difference between the two. So what we can see is that on an in-shell basis, consumption per capita in the US is significantly higher than it is in Australia. So 113 grams per person in Australia in 2025 versus in the US 205 grams per person, so 92 grams difference. And when we look at opportunities in the Australian domestic market, what we're trying to understand is how are we actually going from a per capita consumption perspective compared to alternative countries? What are they doing different, and is there an opportunity for us to learn and to actually implement some of those programs or processes to try and increase consumption? The thing that is really quite intriguing is, from an almond point of view, Australia's consumption is equal to or thereabouts with US. So we don't see a difference like this with almonds, but we do with pistachios. And we're not really clear on exactly the reason why, apart from the fact that Wonderful have invested huge sums of money in promotional activities in the US. They advertise at Super Bowl, you know, there are a whole range of investments that they make. I think they've invested something like $1 billion over the last 10 years in promotional activity and marketing activity.
That's hardly rocket science, is it?
Well,
I'll finish presentation first.
the 1 year of quietness is disappearing. Look, the only thing, Chris, that I would say is that it's really intriguing now, because what we're seeing in the US is demand per capita consumption of in-shell is falling. So it really is an intriguing one. It may be that all of the promotional activity that they have done actually has resulted in growth, but now they've come off that curve, and there are so many other products now being developed, other nut lines as well that are in consumption. So Australian US kernel, so we do the same thing with kernel here when we split them out, and the difference is nowhere near as great. So it's a really interesting one. And if we look back at this period of time here, 2013 to 2017, per capita consumption of kernel in Australia was actually greater than the US. So the US has really accelerated their per capita consumption of kernel over that period from 2018 forward, and Australia's consumption has grown. The peak period in 2020, as we all know, is 2021 was COVID and the COVID spike. We were a little bit surprised that consumption fell so far at the back end of COVID, and we found in almonds and in pistachios that very limited amount of the spike in per capita consumption during COVID was actually held when COVID came off. So people didn't maintain their consumption habits. They reverted back to largely where they were prior to COVID itself, and we can see that where we go from 2020 here at 52 up to 76, back to 53, 56. But we're now moving up to 75, 76, so we're in a growth phase with kernel, as the US is as well. And then this is just total. When we combine in-shell and kernel together, and we actually look at US and Australian, we can see Australia really is not moving greatly. So the increase in kernel is being offset with in-shell decline. But we can see here in the US, and this is a bit of a worrying trend, we can see since 2021, total per capita consumption in the US has actually come off, and it's come off 15%. So, and that's why we just have that question, Chris, that we can see that it's been coming off since 2021 around the spend with Wonderful.
Have you got longer to go, Nigel?
No, not much. I'll do this really quickly. So aflatoxin, just some comments around aflatoxin. In 2024, 3.4% of our return kernel failed aflatoxin. In 2025, we've had 86 endpoint bins failing aflatoxin in 2025. So 2024, 2025 spikes in aflatoxin. Just some of the developments going on with pistachios. Some marketing projects that we have going on. This is just showing forward projections of Australian. Some comments that I've made previously. Category consumption plan. These are the areas that we're working on to drive consumption in the Australian domestic market. Brand development. We've got a brand under development which we're planning to launch in the 2026 season. In-shell kernel, flavour development and product development under new product development areas, and reactivating the Wisecrack campaign for 2026 on crop. And that's it. So thank you.
We have gone a bit over time. I think this is a really important session. Growers, we do get to see Nigel more now with APPC presenting during the year. I'm happy to, while Nigel's here, to open up a little bit to continue that discussion on marketing and pricing, because I think it's important for all of us. I wasn't being flippant either when I said it. And if I've got a question, Nigel, 2 years ago, I think as an organisation, you asked growers for a levy for marketing. I don't think we paid that this year. My question is why not? And B, how much are you spending? Because whilst prices are good now, unless we do something as an industry, it'll be too late if the trend keeps going the way it is when you're trying to arrest it. when these big volumes come and you just can't turn a market on. Well, my view is you can't turn a market on and off. You've got to have a runway to do that. I think now's the opportunity that what growers are here to ask Helen, well, I certainly think we should be putting more into preparation. The personal view, that's not a good view. Look, it's like we're running over time, but we're here as a gathering which happens once a year as a combined Riverland Sunraysia. I think it's important that we, while you're here, to open up a little bit and extend shorten our lunch break, shorten our coffee break, if you're happy to do that. Are people happy with that? Yeah. Yep. So that's my question is, I don't think we're paying a contribution, we're paying a levy, as a marketing contribution. Do you envisage with that program you're forecasting or projecting that you'll want a levy from us, and should we be paying something?
Is that us as APPC or PGA?
Well, both actually. I mean, 2 years ago it was the industry. From what I read there, it's APPC developing their own brand of product, which is interesting in some respects.
So I'll comment that there are two aspects to it. One is industry Australian pistachio promotional activity, and one is any initiative that we have in our own area of brand development. So any investment that we make to develop a brand ourselves is essentially an APPC, NPA development and investment. Anything that's done on a broader industry base that is promoting generically Australian pistachios will be a cost that will come from an industry perspective. But in all reality, nothing comes for free. So any money that is actually spent for developing at whatever level or whatever platform it's actually invested in spent needs to be actually recovered and needs to be funded itself. So if as an example, we were to fund a brand initiative ourselves, and we are looking at doing that, and we're down the development path, at that point in time that's being funded by us. The way that it would actually be expected to work is that by doing that development, it would actually capture value. That value capture would then recover some investment cost, and it would flow the benefits of that back in grower returns. So I should say from the outset, our mantra and our reason for existing in this industry, both at an APPC level and from an NPA point of view, is to optimise grower returns. And the investors, shareholders, owners are growers, so the focus is on grower return. So everything that we do is actually focused around how do we optimise grower return. And that's from market-based initiatives, promotional programs, activities, to how can we maximise the recovery of high-grade value out of the individual crop itself, because the more that we can actually maximise the value of the crop, the better the average returns are, and the better those returns are back to growers themselves. So that's our mantra. We think we've been successful with that. We know in the almond industry we've been incredibly successful in that area, and we believe that we've brought all of that expertise into the pistachio business as well. The only other comment I should make is in terms of the investment that's being made at APPC in developing the new hulling facility. I think most of you, or a lot of you, came to the opening. That development is ongoing. We have new silos being installed now for the 2026 season. We plan to continue to roll that out and develop it. But it is, and I'll talk at a CEO level now, it is an incredibly expensive process to invest in a facility that runs 24/7, 14 days a year. And it runs maximum 30 days a year. It is, if I look at it from my perspective, it is incredibly difficult to make this work commercially. So we have to be thinking about how do we make sense of this as we move forward, and more capital is required to continue to develop those facilities. So I flag it with you because right now it is way off being commercially viable and commercially profitable. So there are a few things that we as a business need to get our head around as we continue to talk to the shareholders about putting capital into the business and making commercial sense of it. And really, it's a short-term challenge. You know, it's in these years where you have to invest the capital up front, high financing costs, high depreciation costs, charges, trying to get charges to cover and reflect those investment costs is incredibly difficult.
Questions?
Nigel, if I remember correctly, when we discussed the shelling process in Australia, the last sort of thing was roughly around about 2030. It would make sense to sort of look at that, given that the increase in demand for kernel versus the gap sort of closing. Is there any thoughts on bringing that forward?
There are two aspects to it, I guess, Terry. One is cost, and two is market delivery. You know, turnaround time. In terms of cost, we were chatting to a Californian processor last week who is actually shelling themselves now. And there's more and more shelling being done in the US. It is no cheaper doing it in-house than it is doing it in China. So when we look at in actual fact, we're doing it cheaper than they're doing it internally within the US at the moment with our activity, including distribution, you know, freight over and back and everything else. So we're not convinced at the moment that there is necessarily a cost saving in it. The advantage is that we'll get into market earlier. But once you've got a program in place and once you've got regular, consistent deliveries going and product coming back, that turnaround advantage is actually lost. We have trials planned. There is an independent sheller in Australia at the moment. The extent of it we're not quite sure of, but we're planning on doing trials and just having a look at the opportunities there. So I'm not sure at the moment, Terry, but both the shareholders have been talking to me about it, saying we should look at whether it makes sense to bring that forward or not bring that forward. So we're probably not quite sure at the moment, but my conversations out of California last week suggest that there's no cost benefit likely or that they're achieving to do it. It's inevitable. Is it going to be 2030 or 2028? We're not quite sure at the moment. The real challenge is not shelling. It's actually making sure you maximise the volume of whole material, which is the more valuable material, and making sure there's no risk of having any shell fragments in the kernel, because that becomes a real food safety risk, and that's the benefit of China at the moment, is the hand sort and the 100% guarantee that it's shell free.
Any other questions? Just back to Mike, did you spend any money on promotion this year for growers? Was there a contribution from growers this year? There was 3 cents the year before.
I think I'll be careful in my response.
I
think the answer is no.
Yeah. Any reason why not? You thought the market was going with you, so you didn't need it?
Yeah. Okay. Yeah. I mean, if we look at where we are at this point in time, we're 100% fully sold. There's a lot of other marketing activity and hype that's going on that we're a beneficiary to. So we want to invest money when we're pretty confident that we're actually going to get a return, and that's the really difficult equation, is to actually try and get those fundamentals. But it's absolutely on the agenda for 2026 season. Absolutely.
I mean, and to finish up, it's a different picture to last year. When we sat here last year, I think prices had come down for the first time in 10 or 15 years since I'd started growing, which is 09. And we thought these big crops coming forward, that was going to be a trend downward. Yet 12 months later, bang, we're up nearly 25% in US dollar terms, which is a massive turnaround. But I don't think as an industry we can rely on that. So I'm just concerned. Yeah. Anyway, time to the next session. Thanks, Nigel. I think came together for a great presentation. There you are.
How quick is your question, David?
Very quick. Oh, sorry.
Nigel, the forecast is for 500 million pounds of pistachios to be produced over the next 5 years. And the big question that we as growers need to sort of contemplate is, what effect is that going to have on pricing? Now, you've already said that, who knows how long the piece of string type thing, but there's certainly going to be supply and demand each guy's here. And in your personal opinion, I'll just make that comment. The fact that the pistachio industry remains so strong is because it's had a dominant player in the marketing side of things, and that's wonderful.
Yep.
And so we all should look at Wonderwood's for saying what a wonderful job they're doing. And the other issue is that they've had a dominant player, and they've only had about 5 or so players, other players in the California market that has supported that sort of premise. Unlike the almond industry, where there may be 100 different retail wholesalers. In your personal opinion, what sort of effect do you think this £500 million over the next 5 years coming on the global scene is going to have to the price on a cent per kilo basis or something? I know that's an impossible question to answer accurately, but it's probably from your standpoint, where you see the industry, where do you think the pressure is going to be, and what sort of reduction, or if there is going to be a reduction in price?
You're a diamond. You're a diamond. Under pressure, you have to respond.
Yeah.
10 words or less.
If you said 10 seconds, I'd sort of dwell for 10 seconds at a time, it'd be over. Look, there are three aspects to it. One is, as you mentioned, wonderful. And the question on everyone's mind in the industry is how long are Stuart and Linda Resnick going to continue to be running that business, and what happens when they're not? And that's getting closer and closer. Just in all reality, that's getting closer and closer. That's been the most significant influence around pricing stability, and in actual fact, growth and guiding the industry through this growth period with pricing stability. So I think that's one risk in the next 5 or 7 or 10 years, absolutely. Secondly is exchange rate, and if we see the US dollar exchange rate, Aussie US dollar, go from 65 to 75, then that's going to have quite a material impact on returns. In terms of the actual increase in production and effect on origin pricing, I think it's going to be somewhere between maybe 10 and 20%. Somewhere in that range, if we look at what's actually happened across the global industry with other products and commodities through that area. The real advantage, one of the advantages in the nut industry overall is it's not a fresh produce. So it's actually got shelf life stability, and you've got the ability to actually not be under pressure to sell today and find product deterioration. So there are ways that you can actually, if you've got enough cash in the bank, you can hold product, you can actually activate programs and do things, but I think maybe 10 to 20% is probably going to be somewhere around where it ends up. I'm more fearful about exchange rate, to be honest. If it goes 75, 80 cents, then the impact of that is quite significant.
Thank you. Thank you.
I don't want to
We're
David.
really running late.
No, this is really important as an industry. Pick up on your point. California has one dominant, 3 or 4 others. Australia has one. I don't think growers should underestimate that unity and cooperative nature that we have as an industry with one huller, one seller of Australian pistachios. There's a small plant open up, and there's a plethora of plants open up, and that competition starts. I reckon prices will go one way. And the other thing, David, supply growth. You've got to grow demand. We've got to grow demand. That's my point about making contribution. Thanks, Brent.
Thank you.